What's going on, guys? It's Phil from Millennial Money Gains, and I want to thank you all again for tuning into this video. Today we are going to go over two things. The main topic of today's conversation will be the stock market crash that just took place at the end of last week. The next thing we'll be talking about and I will be showing you is a little tour of my home gym. So it's a little messy in here, but I promised last video that I would give you guys a tour, and I am going through on my word. I don't have much here, but if you want to just skip to the main topic of this video, you can skip to this time right here. I want to thank you all for tuning in. Please hit that like button down below. It really helps the channel out. Make sure that button turns blue. Also hit that subscribe button for more videos. On Tuesday, when I produce my next video, we will be doing a new series. I will introduce that new series on Tuesday. So stay tuned for that, and let's hop right into this gym tour. Alright guys, so we're going to start at this section of the gym. So this is all my weight section. I have a weight tree right here. You can tell I purchased these bumper plates here. I have a couple 100 pounds of those bumper plates, and I have a few metal ones up here along with my collars. So this is not sponsored, but these bumper plates are all from Titan Fitness. I really love their stuff. And you'll see a lot of my equipment in here is from Titan Fitness. It's really pretty cheap for the quality that you were getting. So here I have my Rocky poster. It's one of my favorite quotes of all time. Here's my Live Sore poster. I was actually sponsored by Live Sore for a little while, and so I have that there. I am no longer sponsored from them, but I still like that sign. I keep that up in my gym. So I have a 45-pound a bar here from Titan Fitness, as you can see here. Titan Fitness, it can hold up to 1,000 pounds. So I use this for deadlifting, squats, bench, all that stuff. So as you can see, it's a little messy here, but I have this bench. This bench I got bought from Amazon. It was like 50 bucks or something. And along with this squat stand that I have, I do shoulder press on here, I do bench, and I do squats. So it's a cheap stand, but it does the job. Here I have some weights. I have my shoes there, as you can tell. I have some weights here, some push-up things. This is kind of cool. You could change the position and of the push-ups and do all different sorts of push-ups. I have my iron gym pull-up bar. This is some cardio. It's just a little cycle bike. Very small space. Here's my weightlifting belt, foam roller, my scale, my chalk, and a bike. And here's all my resistance bands, and my weighted vest, and my ab cruncher. So I hope you guys enjoyed that short little tour of my home gym. I don't have much here, but it's getting me through quarantine. And now gyms are actually open. I will probably be going back to the gym rather shortly. But this gets the job done if I have to deadlift or squat or do pretty much anything I want. I just wish I had a little more room for dumbbells. And hopefully, maybe I'll add those in the future. But that's enough with the home gym talk. Let's move on to the topic of the video. And that is the stock market crash. So before we start this video, I just have a little disclaimer. I am not a financial advisor. I am not your financial advisor. So these videos I do for entertainment purposes only, and I am only relaying my opinion here and nothing else besides that. So let's move on to the video, and we are going over the second crash of 2020. So on Thursday and Friday, stocks took a dive, right? So they decreased by 10, 15, 20% between Thursday and Friday. Now, what is this, and what do I think this is? So everywhere you look, you see stock market crash. We're tumbling. We're getting that second wave. This is the second crash of 2020. Now, what do I think it is? I think it's just a little correction, and stocks that were overvalued fell the hardest. And now that they were way overvalued, and I still believe that they still have room to fall. So these big tech stocks such as Tesla, Apple, Amazon, Microsoft, all of those big tech, Fang, Netflix, Facebook, all those big techs, they all dropped a significant amount. I'll post them up here, some pictures of how much they dropped on Thursday and Friday. So, what do I think? Do I think that the drop is over? Do I think next week it will rise back up again? I think there's still significant room to drop. These companies are way overvalued. Pretty much all of them are way overvalued. They are great companies, and I will not take anything from that, but I think their stock prices are overinflated, especially Tesla. So as you guys know, Tesla had a big sell-off on Friday after hours because they did not make it into the S&P 500, which was a shock to everyone. Everyone thought they were going to get in, but they were not included. Do I think Tesla will be included in the S&P eventually? Yes, I do. Will it significantly help their stock price? Yes, it will. And that is because index funds and all these big hedge funds will try to dive onto Tesla stock, and they have to include it into their index funds and their mutual funds, ETFs. So the stock price will rise. But I still believe Tesla and Apple and these companies are way overvalued. Their PE ratios, Tesla is above 1,000 still, even going down 20% that it went down. So, what caused this stock market crash? So as you guys know, or may not know, GDP, gross domestic product, has a direct correlation with the stock market. So if $20 trillion of stock market cap, if there's a market cap of $20 trillion, GDP will be around 20, if it's around $20 trillion, then the market is, you can say, fair value. But as you can tell, GDP has dropped there by 33%, and the stock market has risen since the end of March and April, has risen consistently. So pretty much all of these major tech stocks are way overvalued. So why do I not think this is a second stock market crash? Because I saw all airline stocks, all travel stocks, and I'll post some pictures here, that did not even move on Thursday or Friday when everything else was dropping. These stocks did not move. And that is because they are valued at an appropriate valuation currently. Due to the pandemic and the illness that is going around, these companies are valued at pretty much undervalued right now if they can recover. So where should you put your money now? I'm not going to tell you put it into travel stocks, put it into airlines. I will not tell you to do that because they are risky. I will be giving you an update on what am I doing on Tuesday when I introduce this new series. I'll give you guys an update, but I will not tell you to do that. What I can tell you is the best bet is to average down. So now if you bought Tesla at its peak, your best bet is to average down. Now that Tesla is dropping a bit and Amazon's dropping a bit, this is just another opportunity to buy in. So will the stock prices keep dropping? They may not. There is no way of knowing. But now that you know and you have seen that they have dropped a bit, I think it's a good time to buy in. I think if you want to wait a little bit and see if they continue to drop, you can. There's risk in doing that because they may pop right back up, or they may continue to drop. So I think everyone's best bet is to just put a certain amount in each month or each week and try to average down their cost basis. So say you bought Tesla at its peak when it was around $2,000 a share before the stock split. Now you got hit hard because it dropped. I think it's best to put in 100, 200, whatever you can afford into Tesla every week in order to average down. And eventually, Tesla I still think is a great company. I still think it's a buy long term. But for now, and put as much money as you can and as you are willing to lose into the market to bring down your cost basis. So this is called dollar cost averaging. So that is sometimes if you buy at a great price, say you bought something like Wayfair in March when it was at $26 a share. Now it's up over 300, I believe. You buy that $26 a share. You bought 100 shares. Then you really love Wayfair. You really want to keep putting money into them. It's best to put $100 or so into that stock each week, and you can dollar cost your average. It will go up because the stock keeps rising. Opposite is if you bought too high and the stock keeps dropping, you can dollar cost your average down in order to try to make more profit for when and if the stock goes back up again. So, what should you guys do with your money? I think Tesla, Microsoft, Apple, they're always going to be buys. I will not be purchasing any of these, but I still think they are buys long term. And all these big tech stocks, they will continue to be buys. I just think there's a little bit of correction in the market that was long overdue and needed to happen. But it was definitely not a stock market crash of 2020, the second one. So, hope you guys enjoyed that video. Please leave a like button if you did. Make sure that like button stays blue. I'll see you guys again on Tuesday. Make sure you subscribe and turn that notification bell on, as we will be introducing that new series. So stay tuned for that, and I will see you guys in the next video. Peace!